Elena, 2025 was another strong year for U.S. stocks, but a lot of the gains came from lower quality equities, if you will. Do you expect that to continue in 2026?
Yes, this was an unusual year, and I think investors are looking for returns, and they're starting to pull away from the overvalued large mega caps. And I think there's two ways to do it. One way is to jump the other extreme and go for low quality, for high short interest names, but that may not be sustainable for long term. Another way would be to look for strategies that provide exposures to factors you believe in, not stocks, but factors. Maybe smaller size, maybe higher value, maybe strong quality as well. And so look for strategies that provide consistent exposures to those factors. And that way you can satisfy your appetite, but don't get burned with short-term returns.
So which factors do you like?
Value, quality, and sentiment, and size to some degree.
And then what are your thoughts on small cap stocks? Because you mentioned the large caps before. Small caps are finally getting their due, perhaps. We've seen a nice run, for example, in the Russell 2000. Will that continue?
It could. There's no guarantees, but definitely they found their comeback in 2025. We see similar pattern in 2026. Year to date, large caps are up 2%, small cap values up 8%. That's a significant difference in a month. Environment is definitely setting the stage for that, for lower interest rates, but also valuations. Valuations indicate that the small caps are overdue for comeback.
And how are you putting it all together in a portfolio construction? Do you want to go market neutral? How do you want to put all these different weightings, these different cap sizes together?
I think there is a place for all strategies in an investor allocated portfolio. So definitely there is allocation still for large caps, definitely time potentially to look and rebalance into small caps. You mentioned market neutral. Absolutely, there is a place for that. That could be a place for fixed income-like allocation for somebody who is worried about inflation or interest rate risk. So market neutral, not correlated with the market, is a great place to be. Or for investor who still wants to be equity allocation, but with less volatility. So that's definitely something to consider.
Okay, so how does your global opportunity strategy work? How do you manage that?
It's challenging, but it's doable. And so we have a great team in place who runs this strategy with very good success so far since inception. We start with a universe of 10,000 companies. That's one of the competitive advantage of Bridgeway is ability to, because we're smaller, we're a small boutique firm, we're able to go to small universes. And so those small cap universes offer great opportunities for us. We start with 10,000 companies in the global opportunity markets, and we create portfolio with exposure to about 35 markets with about 300 long and short names. This is a portfolio that has a target exposure of 200%. And most importantly, it is market neutral, it's currency neutral, and it has a very strong, consistent track record for somebody who is looking for less volatility, but consistent returns.
And then finally, and how does it fit into an overall portfolio for a client or an advisor?
Could be something as a replacement for fixed income because you have the consistent stream of returns, but the risks of inflation and interest rates are already incorporated there. Or it could be for a piece of the equity allocation where somebody, an investor or advisor, thinks that there's too much volatility in the market and let's dampen that volatility and let's look for the market neutral strategies.
All right, well, thanks for coming on and talking about it.
Thank you, appreciate it.